In Australia, taxes are often viewed as an unavoidable burden, the price that citizens pay for a functioning society and the public services they benefit from. However, taxation in Australia goes far beyond just funding roads, schools, and healthcare. The tax system wields significant influence over many aspects of Australian life, shaping our decisions, determining our opportunities, and subtly enforcing government-approved behaviours. From the way we work to how we save, spend, and even structure our families, the tax system is not merely a financial mechanism for raising revenue. It has evolved into a sophisticated tool of control. The illusion of choice, how taxes dictate your behaviour. Governments in Australia don't simply collect taxes, they use them to influence how citizens live and make decisions. Through a complex system of deductions, tax rebates, incentives, and penalties, the Australian tax system effectively nudges individuals towards certain behaviours while discouraging others. For example, the high marginal tax rates in Australia have the effect of discouraging Australians from working overtime or pursuing career advancement. The higher the income you earn, the more you are taxed, making it financially challenging for many to move up the income ladder and reach higher-paying job opportunities. This system impacts Australians' ability to maximise their earning potential, limiting opportunities for career growth and economic mobility. In addition, payroll taxes further influence job markets by making it more expensive for businesses to hire employees. This tax burden affects the decisions companies make when it comes to hiring and can even result in job cuts or hiring freezes as businesses seek to reduce their tax liabilities. The overall result is that these taxes distort labour markets, affecting both employers and employees in ways that go far beyond the cost of the worker's wage. The tax system also has a profound effect on how Australians approach home ownership. The Australian government's tax policies, such as negative gearing, capital gains tax exemptions, and other incentives, encourage individuals to invest in property rather than rent. This has had the side effect of artificially inflating real estate prices, pushing many Australians into home ownership when they might otherwise prefer renting. The result is a housing market that is skewed by tax incentives, making housing less affordable and further distorting individual decisions about how to live and invest their money. When it comes to saving for retirement, the Australian tax system heavily favours the use of superannuation. The government provides significant tax concessions for superannuation contributions and earnings, making it the primary way most Australians save for retirement. While this system helps some Australians save for the future, it also limits the ability to build wealth outside of the superannuation system. For those who wish to invest in other assets or financial vehicles that are not part of the superannuation framework, the tax system makes it more difficult, effectively limiting financial independence and flexibility in retirement planning. Healthcare in Australia is another area where the tax system plays a key role. The Medicare levy, which is a percentage of an individual's income, funds the public healthcare system and imposes a direct link between taxation and healthcare access. Additionally, tax incentives for private health insurance tie Australians' healthcare options to their tax status. This reduces individuals' ability to choose the healthcare model that works best for them, forcing many people to stay within the confines of the government's approved system. The tax system thus limits choice, tying medical care to job status and other tax-driven factors. Overall, these policies are not simply designed to raise revenue, they are deliberate strategies by the government to shape how Australians live, work, and invest. In this way, the tax system functions as a powerful tool of social engineering, subtly nudging people towards particular ways of living that the government deems desirable. Marriage, family, and the taxman's influence. The Australian tax system does not remain neutral when it comes to personal life choices. It plays an active role in shaping decisions about marriage, family structure, and caregiving. For example, the tax system has built-in financial rewards and penalties for married couples, depending on how they file their taxes. In Australia, filing jointly as a married couple can either save a couple money or cost them thousands of dollars, depending on the relative income of each partner. This creates a financial incentive for or against marriage, with some couples opting to delay marriage or even avoiding it altogether based on the financial implications of their decision. The government also uses tax policies to encourage or discourage having children. Family tax benefits and child tax credits provide financial incentives for Australian families with children, making the decision to have kids a financial calculation rather than a purely personal choice. The government's tax code encourages or discourages parenthood by providing specific rebates or credits, shaping family decisions based on the financial rewards offered. In addition, the Australian tax system's rules around dependence and caregiving can significantly influence family structures. For example, the tax code allows individuals to claim children, elderly parents, and other dependents as tax deductions, reducing their tax liability. This incentive affects caregiving decisions, as individuals may be motivated to provide care for family members, not out of love or duty, but as a strategy to reduce their tax burden. This is a stark example of how the tax system can transform personal and family decisions into financial calculations, subtly changing the way Australians structure their lives and their relationships. By shaping the financial incentives surrounding family and marriage, the tax system plays a critical role in shaping broader societal norms. The government can promote certain family models and discourage others without explicitly enforcing any mandates, making it a powerful tool for social influence. The surveillance tax state. Modern taxation in Australia isn't just about paying taxes, it's about being watched. The Australian government is increasingly tracking the financial activity of individuals and businesses, leaving very little room for financial privacy. Through the PAYG, Pay-as-you-go system, and the Business Activity Statement, BAS, employers and businesses are required to report earnings directly to the Australian Tax Office, ATO. This eliminates much of the discretion Australians once had regarding their earnings, making it nearly impossible to evade taxes without facing penalties. As cash transactions become less common in Australia, more and more financial activity is logged digitally. Every purchase, transfer, and investment is now recorded, which makes it extremely difficult for individuals to avoid taxes or hide their income. In addition, the Australian government has cracked down on cash transactions, pushing society towards a fully digital economy. The government tracks every financial move, making it difficult to avoid paying taxes in any meaningful way. The Australian government also shares financial data across borders through initiatives like FATCA and the Common Reporting Standard, CRS. This means that even Australians with offshore bank accounts or foreign investments are subject to scrutiny from foreign tax authorities, eroding any remaining financial privacy. These international agreements ensure that financial data is shared across countries, further limiting the ability of individuals to engage in private financial activity. The overall result is a tax system that leaves no room for privacy. Every financial action is tracked, and personal autonomy is eroded as Australians' financial activities are increasingly monitored. The hidden cost, psychological and economic dependence. Beyond its direct financial impact, the Australian tax system fosters an increasing sense of dependence on the government. Progressive taxation, which redistributes wealth to fund public services such as welfare, healthcare, and pensions, encourages Australians to rely on government support rather than pursuing self-sufficiency. Over time, people become accustomed to receiving government assistance and may grow less motivated to build their own financial independence. Moreover, the tax system discourages self-reliance in certain areas. Australians who attempt to opt out of the conventional system through homeschooling, off-grid living, or bartering often face penalties or lose access to government benefits. By discouraging alternative lifestyles that exist outside the formal economy, the government effectively traps people within the system, making it difficult to live independently without suffering financial consequences. Additionally, when the government faces political pressure to avoid raising taxes, it often turns to indirect taxation methods such as inflation and deficit spending. Inflation acts as a hidden tax, reducing the purchasing power of money and eroding savings without directly raising taxes. By devaluing the currency, the government can effectively increase its tax revenue while avoiding the political fallout of raising formal tax rates. The more individuals become entangled in the tax system, the harder it becomes to escape. The system fosters economic and psychological dependence on the state, making it difficult for people to break free from government control. Breaking free? The fight for financial autonomy. While complete tax avoidance is practically impossible, Australians can still reduce their reliance on the tax system through strategic planning and informed choices. Tax-efficient investing, such as using tax-advantaged superannuation accounts, can help minimize the amount of tax paid on income and capital gains. Additionally, capital gains tax exemptions, negative gearing, and other investment strategies can help Australians keep more of their wealth. By taking advantage of these tax-saving strategies, individuals can retain more of their income and reduce the government's claim on their wealth. Alternative income streams, such as freelancing, entrepreneurship, or becoming a digital nomad, provide more flexibility and control over how much tax Australians pay. By earning income in a way that is outside traditional employment, Australians can avoid some of the burdens imposed by the tax system, giving them more control over their financial future. Advocacy for tax reform is another way to reduce government overreach. Supporting tax reforms, such as flat taxes, consumption taxes, or decentralisation, where states or even countries compete to offer the best tax rates, can help reduce the overall tax burden on Australians. These reforms could create a more competitive and efficient tax system that gives individuals more control over their money and less government intrusion into their personal and financial lives. Who really controls your money? Taxes are not just bills to pay, they are instruments of control. By influencing how Australians work, save, marry, and spend, the tax system shapes society in ways that extend far beyond the simple collection of revenue. Understanding how the tax system operates is the first step toward reclaiming financial autonomy. After all, if you don't control your money, someone else will.